Yo, this was a beautiful entry. Look at that signal candle. This was a beautiful entry for an easy money trade setup. You know, this was actually off some news that came out for the euro. It pushed down right before the news. Then once the news came out, made this beautiful hammer up. I knew I had one then. You know what I'm saying? So easy money trade. You know, I took this boy while I was still in my bed. Then I had to run down here to shoot this video for y'all. I mean, I hope my breath ain't come through your screen right now. You know what I'm saying? I hope you don't pass out while you watching this easy money trade play out. Cause hey, I rolled straight out the bed, take this boy. But hey, easy money trade, beautiful signal candle entry. Bam, 2 legs up, great price action. Count it down with me. 5, 4, 3, 2, 1. Let's say it together.
Easy money.
Listen, I'm here to tell you, everything changed for me the very day I found price action trading. All right. So listen, I struggled to make money in the markets for years. Okay. I was trying to trade the Forex for years and didn't have a lick of success. I mean, not a lick. Okay. Well, I take that back. When I first started, I was using a robot. I had one that worked for a little while and then it just kaput, right? Other than that, trying to trade by hand, trying to trade myself, not a lick of success. All right. Here, this is a real story. My student loan debt, is all, I hope I don't get in trouble for this. My student loan debt is all trading losses. Okay. Trading losses. I was able to qualify for, I believe it was called the Pell Grant, something like that. I was just going to a community college. So my grant actually covered all my expenses. But you know how they trap college students and they still try to, you know, they still offer you loans, although I didn't really need it. But then again, I wasn't working, so I did need it. So anyway, you guys know the system. You guys know the traps out there. Anyway, college student, trying to make it, trying to learn how to trade. So look, I was getting my refund check and I wasn't buying Jordans. I wasn't buying video games. I wasn't putting down payments on cars. Hey, I was taking my 25, 3,500. I was going into the market. All right. I was trying to make it every semester. All right. Every semester I take my refund check. I get into the market. I blow it. Right. Then I would try to learn some strategy while I was busted and disgusted, you know, to wait, to work up, to have something to try again once I got another refund check. So my whole student loan debt, all right, is trading losses. And it remained that way until I found price action trading. All right. And I did a lot of things before price action. You know, I had tried plenty of indicators. I had tried breakout strategies. I had tried pivot points. All right. And then I came across patterns. Now, one thing about patterns that I have to say, I once was a part of this group where they were trading some type of pattern. I can't remember what it was. I almost want to say it was a butterfly pattern. I can't remember, but I was part of this trader group. It was like a free trial and I was winning with them. I admit I was winning. And at that time, my dad was really backing me and I should have just told him like, this is working, Dad, let's continue to pay. But I didn't, right? I kind of let that go. That was the one time I would say I was part of a profiting community or a profiting system early on. And I let that situation go by because of funds, right? Because of my lack of funds to pay whatever it was monthly. Now it might have been expensive. I don't remember. For me not to even bring it to my dad, it probably was pretty expensive monthly charge. But we would have been making money. Sometimes you have to pay to play. All right. And that's the one time I can remember that though they were winning, right? That community was winning. That whatever pattern they was drawing up and we was trading all together live, they were winning. And I just let that one go by. But that's the only time. But that's kind of my experience with patterns. So if you can really identify a pattern or if you know one that wins at a high clip, I don't really got no beef with patterns like I do with indicators. I don't really have that much beef with patterns, because what happens with patterns is that more times than not, price action is still inside the pattern, right? So as one trader sees a pattern, I see price action, okay? And so we're seeing two different things, but probably more than likely we're both trading with trend, right? There's some overall thing that we're both doing. There's some overall rule that we're both following that leads to success. But for me, the light switch didn't turn on, positive green numbers didn't start showing up until I found price action. So, you're going to be biased to whatever worked for you, right? And so at the end of the day, nothing had worked for me until I found price action. So price action is king, you know what I'm saying? For as far as trading goes, I'm going to say price action. I'm going to say Fibonacci retracement zones. I've created a unique strategy that combines those two. You saw it in the intro. That's the easy money trade. That's just an example of combining price action with a Fibonacci retracement zone, creating a great trade setup, that wins at a high clip. And so that's what you have to do. You have to take pieces from everything you've learned to design your own strategy, to design what works for you, to design what's comfortable for you. But I'm gonna tell you, you want to start with price action. I mean, I've seen a lot. I haven't done everything, but I can only give you my story, right? I can only tell you my testimony. And my testimony is that I didn't see a lick of success until I found price action. And I'm telling you, once you can learn how to read a price chart, because that's what price action is to me. Price action to me, AKA the ability to read a price chart. Once you can read a price chart, you can take that anywhere. That's how I'm able to trade in the binary options market. It's how I'm able to trade in the Forex market. It's how I'm able to trade in futures, because I actually learned price action in the futures market. And so being able to read a price chart, just being able to put a simple 21 EMA on the chart, give me the direction, look for second entries, higher lows, lower highs, rally-based rallies, range fades, keeping things very simple, or just focusing on one trade setup. All of those things, that gives you power to profit in the market, all right? Price action gives you power to profit in the markets. And so that's my testimony. That's my experience. Hey, that's all I can show, right? That's all I can give to you. And I'm actually gonna stop bashing indicators, because hey, I've come across some that I like the Keltner channel. I didn't know the Keltner channel, the center line is a 20 EMA. Go figure. So hey, there's an indicator that I like now. You know what I'm saying? I would just change it to 21 EMA. And boom, now maybe that helps me see the trend better. I mean, I'm probably not gonna use it, but I gotta stop shooting all indicators down now, because I actually like the Keltner channel. It has a 21 EMA involved. So whenever you have an indicator that has a moving average in it, that indicator ain't as lagging as other indicators, right? So I'm sorry if I've offended anybody with my bashing of indicators over the probably last 6 months. I've been bashing them pretty tough. So sorry if I offended you, because hey, I gotta go back on some of that and say all indicators aren't bad. Not at all. Because the Keltner, if it's got the 21 EMA in it, I'm with it. Because I'm a 21 EMA disciple. So if it's got the 21 EMA with it, I'm with it. Okay, so I'm sorry about my bashing of indicators. Going forward, if it works, hey, if you got an indicator combination that's working, share it with the rest of us. That's how let's roll like that, right? Share it with the rest of us. You got a chart pattern that's fire. Hey, share it with the rest of us, right? Put it in the comments. Let's share information out here. Let's help each other, all right? Because listen, it's retail traders against institutions, right? It's retail traders, all right, against big money, all right? It's retail traders, all right, against banks, all right? So let's help each other out, right? If you got something that's fire, let's help each other out, all right? What I have to share is price action, all right? So what I want to do is go to some charts, all right? And so we can look at some differences between price action and patterns and see the good, the bad, and the ugly, all right? Let's go to the charts. Okay, so we're going to look at 4 chart patterns here. We're going to look at the bullish flag, the bearish flag, a triple bottom, and a triple top. And my point of showing you this is I have a couple points. One, to show you that, hey, there's more than one way to skin a cat, right? There's more than one way to win in the market. I also want to show you how most traders who are learning patterns, I see how they could be confused. I see why it could be hard for them to spot the pattern. So overall, to me, it's harder when you're trying to just find a certain pattern, when you're trying to find a picture within all the market noise. To me, that's a little bit harder, but people do it, or they say they do it anyway. Then I want to kind of point out some points of how, people like things to be the same way every time. We like, what's the word? We're habitual creatures. We like, we like to see the same exact pattern, the same exact way, the same exact distance, and we want it to work the same exact way every time. And that is just not how the world works. Okay. But I do want to show some correlations between chart patterns like a bullish flag and simple price action. Okay. And what I want to show you is how price action generally is easier. So let's say we're checking out this bullish flag. All right. Now this was a pretty good picture that I found on the bullish flag on Google, right? I just typed in bullish flag pattern. So here they show a flagpole. Okay, I can see it. And they show the flag that they've drawn. Okay, I can see it. And I can see this all after the fact, right? It's easy to see this after the fact. And then they show the breakout. All right, I got it. I see the bullish flag pattern, but that's so easy to see after the fact. I don't know if I would have been able to spot that while prices were moving and then entered at the right spot. But let me show you something. If you can't see it, if I was trading this, first of all, my 21 EMA would have been doing something like this. Okay, so I would have known to be looking for a long. Okay, now let me show you something. Where they call this flagpole, I would have saw trend up. This is the high. This is a new high right here. All right. So what I would have saw was push down first entry. Push down second entry long. That's what I would have saw with price action. I would have saw that this pattern that they call in the bullish flag, it's nothing to me but a second entry long, because I got a nice trend leg up here. It made a new high. I would have counted the high, and then I would have said, here's a pullback push up. That's first entry. Pullback push up. When this candle breaks higher right here, that is a clean second entry long. We got a little rejection on the candle right here, nearly closed on this top, heading in the direction we want to go. The 21 EMA is pointing straight up. All that evidence tells me second entry long, go long. So that's how my price action would work for me. Instead of trying to look for a bullish flag, I can use the 21 EMA to get the direction, look at what's currently happening. All right, mark the high, look at the two legs back, clearly two legs of correction. Right, the market moves in twos, one leg, two legs, one leg back, two leg back. So because I understand the market moves in twos, because I understand how to use the 21 EMA for market direction, because I understand signal candles, all of this is truly actually just basic price action, then I don't really need to look for a bullish flag. I just need to follow those same rules every time I'm looking, for a trade setup. All right. So now let's take a look at the bearish flag pattern. And I got one ready to go here. Now on this bearish flag pattern, here's the first thing I want you to notice, right? And this was the best one I could find. And actually all of them that I found for the most part had 1, 2, 3 legs back. Okay. Now it's interesting that when they showed the bullish flag, it only had 1, 2 legs back, which is what you will see in the marketplace more times than not. Every now and again, you'll get 3 legs like they're showing here, 3 legs of correction. But normally you get 2 because what did I just say? The market moves in twos. All right. So I'm not saying that this is a conspiracy. All right. I'm not trying to be this conspiracy trader out here. What I am saying is that there's a lot of bad common trading knowledge out here. Okay. What I am saying is that people like things to be the same way every time. Okay. So knowing that this is, human psychology, why are all the bearish flag patterns 3 legs back? A lot of these were a lot of these that I looked up were 3 legs back. Okay, here's one that's 2 legs back the way it's supposed to be. 1, 2, boom. Now this one was correct. But a lot of these was 3 legs back, 4 legs back. Why teach people differently than you taught them going along? Now the bullish, I found a whole bunch of 2 legs back like it's supposed to be because the market moves in 2s, and then it was correct. But on the bearish, I found a lot of 3 legs back. I don't know. Just wanted to point that out. The difference in trying to learn in the wild on the internet. Okay. So if you're thinking, if you just was going to try to just memorize patterns, your bullish pattern would have had 2 legs. Your bearish pattern would have had 3 legs, which doesn't make any sense because the market moves the same way when it's going up and moves the same way when it's going down. And so if you don't know, if you're new to trading, hey, listen, the market moves in 2s. Okay. So, from a price action standpoint, it would have been hard to call this because I'm looking for a push up first entry, push up. I'm looking for my second entry to be right here, but this one threw a 3rd leg in. Now I will say the market does throw a 3rd leg in sometimes, but the general rule is that the market moves in 2s, so typically on my trade, I'm gonna be looking for a push up, first entry, push up, and bam, here's your second entry long to get another leg of this distance. Now they got that right. The second leg is normally the same distance as the first leg. Leg 1, leg 2. Again, simple price action, I would be looking to enter right here. Okay, you also can enter right here once it breaks, but if you want to get in at the beginning of a second leg entry, right here is your bam. That's your target right there. That's the ideal entry if you want to enter in at the beginning of a trend continuation. Okay. All right. So that's my spiel on that. Let's move on to triple bottom. Triple bottom. Let me change my icon here. All right. Triple bottom. All right. We got a triple bottom here. This is actually pretty accurate. Pretty accurate, except for, again, when you teach people to look for something exactly perfect, you set them up, right? Because here's what happened. You got to touch it. So if you reckon this is a range, right? This triple bottom that they're calling it is nothing but a range, and they have it boxed up, right? They have it boxed up correctly. You buy here, you sell here. You buy here, you sell here. You buy here. Okay. Now, in this case, if you sold here, hey, you would have lost, but it all depends on what type of signal candle you got. If it broke out, you wouldn't have sold right there. Okay. But my only thing is this: you never know. The market could come back down here one more time. Just because you got 3 touches doesn't mean it's going to break out the top. That's what I want to say on this one. Just because there was 3 touches does not mean it's going to break out the top. It can do this 10 more times. Okay. So again, that's my problem with patterns, that you can easily lock in your mind. Okay, if I get 3 touches, I know it's finna break out, and that's dangerous. That's dangerous because again, the market does what it wants. It could stay in this range, who knows how long, right? Bitcoin is in a range right now. It's already had 3 touches at the bottom. All right, it may get 3 more before it finally breaks out. So I'm not going to just lock myself in mentally saying, all right, I triple bottom, 3 touches, I know the breakout is coming. That's an easy way to set yourself up. But I will say this is good trading. When you do get the breakout, you don't go here. You don't go here. You wait for the breakout pullback, which they show accurately here, and you want to enter right here, and then that's how you actually catch a breakout. So if you don't know, The proper way to catch a breakout out of a range is to take a breakout pullback. Don't take the breakout, because most breakouts fail. Okay. And that's why I hate breakout strategies, because breakout strategies is by far the worst bad common trading knowledge. Okay. Because most breakouts fail. So when you get a breakout, do not go here. Don't go here. Wait for a retest of the top of the channel, top of the range, and then you go. Okay, much safer, much safer. Okay, so let's look at a triple top now. Triple top, same deal. All right, same deal. Don't program in your mind that just because you had 1, 2, 3 touches of this resistance area, that's it. Hey, you could easily come back up again, come back down again, come back up again, come back down again. You never know. You just never know. But I will say again, on this one, they were teaching. They did, and this one actually showed it. You don't go here. You don't enter here. You wait for the pullback and you enter here. So this one was good teaching. This one showed you how to do it to perfection, and it even gave you a target, right? And the target is actually, now this one here is pretty good teaching, because the target is even pretty close, because what you would be expecting is, this is a breakout leg, pull back, probably 2 legs back. You would be expecting another leg at this distance, which is a little bit further than that. It's probably something closer to that, which is just about to the target they put you at. So this particular triple top pattern strategy was pretty good teaching, other than just saying, just because you got these 3 touches, don't just go on that, right? Don't just say, because we got 3 touches up here, I'm going. But what you could say is this. First of all, there's a couple things here, which is why I like range fades, especially for newbies. You already fading the range. You would have sold here. You would have bought here. You would have sold here. You would have bought here. You was cleaning house. When you sold here, I mean, if you waited to see what happened and just caught the breakout and then the pullback, and then you're just actually watching all this. So why this triple top pattern, they're saying enter here, right? Get out here. Hey, me as a price action trader, let me change this color. I would have already been in. I would have already been in right here. You feel me? So my profit would have looked something like that. Their profit looked like this. All right. See the difference? Price action, baby. Price action. All right. Simple rules. When you're in a range, fade the top, fade the bottoms. See how much more money I would have made with my simple rule of, hey, if the market is in a range, you fade the top, you fade the bottom. And so, yeah, when we got to the bottom here, I don't automatically get out. I wait to see what's going to happen, because hey, why not catch the breakout? You're up by a mile, right? You're up by a mile. You try to catch the breakout, and then, yeah, so my profit would have been 2 times. Easily 2 times as large as somebody who's trying to take a triple top pattern strategy. So that's the lesson for today. What I hope you can see is that, hey, there are more than one strategy out here that works, right? But learning basic price action will put you in the game, and it's a little bit simpler because all you do is follow the rules, right? Nothing is just ironclad in the market. You're not always gonna get 3 touches. You're not always gonna get. Let's switch over back. You're not always gonna get 3 legs back. Okay. Hey, you're not always gonna get 2 legs back, right? But if you just follow the basic rules of price action trading, it doesn't matter, right? You'll be able to maneuver no matter what the market throws at you. And that's exactly why I love and stand on and trade with and win with price action trading. All right, so that's gonna wrap it up for me today. This is a great time to like, share, and subscribe. I greatly appreciate you guys. Please, hey, if you enjoyed this one, hit me in the comments. Take care of your boy, take care of the channel. We're gonna keep doing it, we're gonna keep pushing it. All right, so I'm gonna sign off with that. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye. If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the Sutton.